All right, everybody. Welcome to the third lecture video for Chapter 4. And in this video here, we're going to be discussing, another section of the income statement. And it's a section that you guys would not have seen before in financial accounting. So this is a very important lecture for you guys. So what we're going to be going over is the section called Discontinued Operations. Okay? And just to warn you in advance, this is probably the section of the income statement that, they're going to test you the most on in this course. Okay, so it's very crucial that you understand. And a lot of students, they tend to struggle with this section. However, I really don't think it's that difficult. I just think that the way that it's worded in the textbook is a lot more complicated than it really needs to be. Okay? So let's just dive right into it and explore, what discontinued operations is and just how to report it on the income statement. So what is discontinued operations? Well, basically it's, a separate component of the business that the company has either disposed of during the year or they plan to dispose of it, right? Just a separate piece of the business that the business, plans to sell. They have no need for it. They're not going to use it anymore, aka discontinued. Pretty, self-explanatory. But the way that it is technically defined and classified is through two criteria, right? So for something to be deemed, a discontinued operation, it has to meet two criteria. First one, like I just mentioned, it has to be a separate, distinguishable component from the business. And secondly, it needs to have been disposed of during the year, or it needs to be classified as assets held for sale. Okay, so you might be wondering, what does assets held for sale means? What does that mean? Well, here's some more criteria for you. There are 6 things, right? There are 6 criterias that make up assets held for sale. So the first one is that there's an unauthorized plan to sell the component. The second is that the asset is available for immediate sale. Third, there's an active program or system that the company's using to find a buyer of the discontinued operations assets. Fourth, the sale of the assets will most likely happen within a year. Fifth, the asset is actively marketed and reasonably priced. And 6, there is unlikely to be any change to the current plan for the discontinued operations assets. Okay? So basically what these 6 criteria mean, just to break it down into a nutshell for you, as long as the company is, actively looking for someone to buy the assets and they expect to sell them within a year, the assets are basically classified as held for sale. Okay? So let's just go through a little example here of, what classifies as discontinued operations. Okay? So let's take the company Loblaws, for example. Now, some of you may or may not know that Loblaws owns several companies. They own Loblaws, of course. They also own Shoppers Drug Mart, as well as Real Canadian Superstore, and many other companies. Okay? So let's say in one year, 2016 comes along, Real Canadian Superstore isn't doing so well. It's not performing, adequately to, meet Loblaws' standards. So Loblaws says, you know what, we're done with this. Screw Superstore. We don't want them. We don't want anything to do with them. Discontinuing this operation. Okay? We are shutting this whole thing down. Okay? That's what Loblaws is saying. So Loblaws decides to, close all the Real Canadian Superstores, and then they're actively seeking, buyers to purchase, their buildings, their infrastructure, their assets, the rest of their inventory. They're looking for buyers. They're reasonably priced, right? So if this were to happen, in 2016, then this is what we would call a discontinued operation, because Real Canadian Superstore, right, satisfies the first criteria. It's distinguishable from Loblaws quite clearly, right? It's its own separate, subsidiary. Secondly, right, the assets are classified as held for sale. Loblaws is actively marketing the products. They're trying to sell them. They're doing their best. And it meets the criteria. Now, I wouldn't worry too much about, what classifies as discontinued operation and what doesn't. Those two criteria, that has to be a separate component and that the assets need to be classified as held for sale or they have to have disposed of the assets in the first year. Those two criteria right there, those probably won't come up on the exam. You're never really going to be asked, oh, hey, is this an example of discontinued operations? Usually the question will flat out tell you this is being discontinued, so you know. You never really have to assess with these two criteria, but I just think it's good to know just in case. However, with that being said, I have seen them ask on the exam, what are the 6 criteria for assets held for sale? They do ask this, they do test you on it, okay? Usually on the application questions. Usually in an application question, right, where there's a discontinued operation section, it will tell you if the assets are classified as held for sale. However, I have seen theory questions asked on the exam where it simply asks you to list out all 6 criteria that make up assets held for sale, which is why I think it's very important for you to understand this. So if you're going to take anything away from what I just said, it's to understand the 6 components that classify assets held for sale. All right? So now that we understand what discontinued operations are, we can now look at, how it's presented on the income statement. Okay? But before we go ahead and do that, I just want to do a little bit of a flashback back to, what our income statement was looking like back in the second lecture video. Because I just want to give you, a before and after comparison. Okay, so here's the flashback income statement right here before, any discontinued operations was recorded or implemented. So as you can see, as you may remember from the second lecture video, we have our operating revenues, we have our cost of goods sold, our operating expenses, we list our non-operating revenues, our non-operating expenses, and we calculate our income tax and then calculate our net income, right? All standard stuff that hopefully you guys understand right now, okay? So this is what the income statement looks like, before we have put any discontinued operations on it. But now this is what the statement looks like with discontinued operations. Okay? So as you can see, really nothing much has really changed at all. In fact, nothing in the statement changed except for we just added a brand new section, underneath the income tax, called discontinued operations. That's it. We just added a little section. So as you can see, the rest of the statement is unaffected, okay? But what you might find weird is that discontinued operations is recorded under income tax. A little bit weird, a little bit odd, right? You might find that weird. I personally do, but that's just the way we like to do it, okay? So just know that discontinued operations, that section is reported underneath your income tax, okay? Now don't worry about the numbers that are in there right now. I just want you to get a visual on where it looks like on the statement. And I also want you to look at what the content is that is presented within this section. I want you guys to know that discontinued operations is basically presented the same, question by question, statement by statement. The discontinued operations section is always going to look the same. There's only 2 contents, 2 criteria, 2 things you record, all right? Whatever you want to call it, there's only ever going to be 2 line items there, okay? Just like it looks like on this statement, all right? Only 2, not 1, not 3, not 4, like a lot of students like to put on the exam. You're only ever going to put 2 numbers in this section, okay? The first, as you can see on the statement here, is the gain or loss from operations. In this case, we had a gain from operations of $3,024. And what this gain from operations means is basically just the net income of the discontinued operations. That's simply all it is, okay? We all know how net income is calculated. We simply just take our revenues from the discontinued operations and subtract them by the expenses of the discontinued operations, and thus we will arrive at either our net income or net loss for the discontinued operation. And that is what we're going to record in our first line item under the discontinued operations section. Simple enough, right? So on the exam, the question's either going to give you a bunch of revenues and expenses for you to add up and subtract in order to calculate the net income, or it'll just simply tell you what net income was. And you just plop that right on the statement. Super easy, right? The second component, second line item, it's a little bit more trickier. It's going to involve more calculations. However, have no fear, it isn't too bad, okay? So the second component is the gain or loss on the sales of the assets of the discontinued operations. So in this case, we had a loss from the sale of assets of $1,048. But I want you guys to remember something, okay? Now, if we, flash back just to the beginning of this lecture video, you'll recall, right, the two criteria for discontinued operations. The first is that it has to be a separate component of the business. And the second one is that the assets have to be either, have sold during the year or classified as assets held for sale. Basically meaning, they plan on selling these assets very, very soon. Okay? So this line object here can represent either two things, right? It's either going to represent the gain or loss from the assets that we sold during the year, right? Because, we have to sell them for it to be discontinued operations. Or it's going to be our anticipated gain or loss from, our expected sale of the asset. Because like I just said, the assets don't have to have been disposed of. They could be, expected to be disposed of. And in that case, we're going to estimate what our gain or loss will be. Okay? Hopefully that's not too complicated for you, but it won't change the formula whatsoever. Okay? But I just want you to know that this number could represent one of two things depending on if the assets have actually been sold or if they are actually classified as held for sale. Okay? So now you know what, this second line object is, representing. Let's look at how it's calculated. Okay? Now, you may remember this calculation from financial accounting, but we'll just run through it really quick just so everybody is on the same page. Okay? So the gain or loss from, a sale of an asset is going to equal your selling price, or, perhaps it could be your expected selling price if you're anticipating your gain or loss in the case that it's assets held for sale, right? So selling price or expected selling price. Question will give you either or. Take that and subtract it by the asset's net book value. You may remember this term. Net book value equals the cost, the original cost of the asset subtracted by the accumulated depreciation of the asset. Okay? And that's basically all it is. Plug in these numbers and you can solve for the gain or loss rather easy. You just need to know what you're looking for. Some questions, they're going to give you net book value and the selling price, so you'll know what to do. Others won't give you net book value, but they'll give you the cost and accumulated depreciation. So it's important to know these formulas in order to calculate the gain or loss in order to fill out this second line object on the discontinued operations section. Okay? But honestly, that's it. That's all you have to record on this statement. Just those two things. The net income of the discontinued operations and either the gain or expected gain from selling the assets. That's it. Then you just add them up and figure out what your, total income or loss was from your discontinued operations. Now, unfortunately, there is, one minor little, hiccup with the discontinued operations section. There's just one thing that is a bit strange, a bit out of, nowhere that catches a lot of students off guard, and, it's kind of a bit of a curveball on the exam, okay? Now, pay attention to the section very closely, okay, look at it. What you're going to notice about our two line objects, right, is that there's a parenthesis at the end of them, saying net of tax, right? They're reported net of tax. But what does this mean? Does this mean anything significant? Do we have to put it there? Yes, and it does mean something. And it's very important that you understand what it means, because you're going to be expected to do this on the exam and in the questions that you practice. Okay? Now, net of tax just means that those two line objects numbers are reported after tax. Okay? They are reported net of tax because, we've already reported our income tax expense above the discontinued operations section. Recall how discontinued operations is reported underneath income tax? Well, since income tax is above, right, we've already, calculated that expense. We don't need any more income tax calculations later on, which is why all those later numbers, these two line objects, are reported net of tax, okay? I know it's not the most sound explanation, but that's the reason they do it. It's because it's reported after income tax has already been deducted above, okay? So very simple, you just need to, remember that discontinued operations, everything reported in it is reported net of tax. So for example, let's say, we have a discontinued operations and it has, a pre-tax net income of $3,780 and the income tax rate is 20%, okay? So remember, it's a discontinued operations and the first line object we always record is net income, right? So usually we would just throw on the net income right on the statement, but remember, it has to be reported net of tax, okay? So we can't just put the $3,780 right on the statement. We have to take the tax out first, okay? So what we do is first we're going to calculate our income tax expense of this net income, right? And remember, income tax expense is just going to be our pre-tax net income times by the tax rate. So we just do $3,780 times by 20% gives us our income tax expense of $756. Then to figure out our net income that is net of tax, we're just going to take our pre-tax net income, $3,780, and subtract it by our income tax expense of $756, giving us a net of tax net income of $3,024. And like I just said, we always put on the net of tax number on the income statement. So that first line object under the discontinued operations section for the net income of the discontinued operations, we're going to use the net of tax number of $3,024. So that's what's on the statement. We don't put on the pre-tax number. It's always the net of tax number. And that's how you record it. Okay? So as of now, you've learned and you've been taught everything you need to know in order to successfully prepare a discontinued operation, section on an income statement for the exam. Okay? Everything I just discussed is all you need to know. But what I want to do now to just close off this lecture video is to just run through an example of a discontinued operations section, just so you get a feel of how to use the calculations and just how to piece it all together. Okay? So let's say the Alley Corporation is discontinuing their clothing line named Sweet Styles. Pretty nice name for a clothing line. Don't know why you would discontinue that. However, the Alley Corporation has decided to do that. And like I mentioned, always in the question, it's going to tell you if it's discontinued or not. All right, so we know right away this is discontinued operations. So they've classified their assets as held for sale. That's very important, okay? During 2015, the Sweet Styles clothing line generates $110,000 worth of pre-tax net income, and Alley Corporation plans to sell the clothing line assets for $433,000 pre-tax. The net book value of their assets amount to $500,000. Income tax rate is 20%. Prepare the discontinued operations section. Okay, so a lot of information is being thrown at us right now. right? And we're going to have to, deal with it and somehow organize it in a fashion that makes sense in order to prepare this section, okay? Looks a little bit daunting at first, but not to worry, okay? We just got to remember that there are two line objects we have to prepare. And the first one for this discontinued operations of sweet styles is the net income or net loss of sweet styles, okay? So if we, run through the givens here, it tells us right in the question that they generated $110,000 worth of pre-tax net income, okay? Key word here, though, is pre-tax, okay? We could just throw the net income of, sweet styles right on the discontinued operations section, but that would be wrong because, again, it needs to be net of tax. So what are we going to do? We're just going to calculate the income tax of their net income, which is just, the tax rate of 20%, times by the pre-tax net income of $110,000. It's going to give us our income tax of $22,000. So then our net of tax net income is just going to be $110,000 subtracted by $22,000 worth of income tax expense. Okay? So then, therefore, we're going to actually put this net of tax figure of net income on the section. We're going to put this $88,000 right there as the first line item, representing our net of tax net income for sweet styles. Okay? Pretty simple. And then the second part is just going to be our expected gain or loss from the sale of the assets. Remember, Sweet Styles has not sold their assets yet. They're classified as held for sale, meaning that they are expected to sell them in the future. Okay? So we're looking for our expected gain or loss here. So in order to calculate our expected gain or loss, we just need to take our expected selling price and subtract it by the net book value of the assets. And the net book value, recall, equals cost minus accumulated depreciation. In this case, however, it gives us our expected sale price of $433,000 pre-tax, and it gives us net book value of $500,000. So the expected gain or loss is just going to equal $433,000 subtracted by $500,000. It gave us net book value, so we didn't need to calculate it ourselves. Okay? So in this case, we end up with a loss of $67,000. So are we going to put this on the statement? No, because this is a pre-tax figure. If we look back at the question, this expected selling price is listed as pre-tax. Okay, it's not a post-tax figure, and everything recorded in the discontinued operations section is net of tax. So we're going to do the same thing as we did for net income. We're going to calculate our income tax expense, which is just the rate, 20%, times by the pre-tax loss of the sale of the asset, which is $67,000. So $67,000 subtracted by $13,400 is going to give us our net of tax loss from the sale of asset of $53,600. And that is the number you're going to use for your second line item representing your net of tax loss of sale from the sale of asset. And just to finish off the section, you just add them up together to figure out your total gain from discontinued operations of $34,400. And that's it. That's all you need to know, and that's all you need to do in order to complete this section. So, as you can see, the discontinued operations section isn't actually all that difficult to prepare. It's actually pretty straightforward, okay? So, let's just do, a little bit of a recap before ending this video, okay? So, there's just 3 main points that you really need to remember in order to, successfully, prepare this section on the midterm exam. Okay, so the first is that discontinued operation is always recorded right underneath the income tax expense on the income statement. Okay? Secondly, discontinued operations is always reported net of tax. All right? That's all you got to do. The questions posed on the midterm will usually give the numbers in pre-tax to try to trick you. They want you to forget to take off the income tax and to make these figures net of tax. Do not forget to do this. This is key. Okay? They always throw those curveballs on the exam. Always take off the income tax. Everything in discontinued operations is reported net of tax. Okay? Just remember it. And third, there's only ever 2 line objects. Only 2, and it's the same 2 every single time. First, the net income of discontinued operations, and secondly, the expected gain or loss from the sale of your assets. That's all you need to put in. That's all you need to know. Okay, so when faced with the big ass question with lots of numbers, just narrow the numbers down to the ones that you need in order to figure out these 2 line objects. Okay, and I guarantee you, you'll be fine. Okay, understand these 3 things and you'll do very, very well on the midterm exam when it comes to discontinued operations. Okay, so that is everything for this lecture video, and I'll see you in the next one. Thank you.